Okay, let's just skip to the good part. My Fundrise portfolio dipped for the first time in 2 years. Was I surprised? No. Was I mad? Not sure. Hi everyone, this is Camilla the Focus Spender, and welcome to my channel where I teach you how to get out of debt, save more money, and invest so that you can build wealth and leave a lasting legacy. So from the title of this video, you can see that I'm going to be giving you an update on my Fundrise portfolio after 2 years of investing. And honestly, for the last couple of years, it's been great. Every time I've logged in, all I've seen is my account value go up and up and up. Even when the stock market was going dip down, dip up, whatever, it was on a steady incline. So this last time when I looked at my portfolio and I noticed a slight dip, I thought, what is happening? So a quick overview of what Fundrise is, and if you want a tutorial or way more information, please be sure to watch any one of the videos in my playlist. But Fundrise is an online real estate crowdfunding platform that allows you to invest in commercial, private, residential properties, and you basically crowdfund, and you're basically buying shares of e-REITs. So you're crowdfunding your money together to buy shares in an LLC that has tons and tons of real estate in their portfolio. So I started my Fundrise portfolio about 2 years ago, and I started with $1,000, and then I started investing $100 per month. When I started out, I had about 10 to 12 projects in my portfolio, and when I did my update last year, I had 43 projects in the portfolio, and now I have 74. So it is well diversified between different states and different sizes of properties. So looking at my overall account, it's up 7.4% from when I invested. So over the last 2 years, I've invested $2,941.63, and that includes dividends that has been reinvested into my account. And my current account value is $3,154.39. So I've done pretty well. So looking at the quarterly performance of my account, so even though my account has done well over the last 2 years, I want to look at the last year, 2022, since that was such a roller coaster of a year. Quarter one, I was at 4.8% in returns. Quarter two, 1.1. Quarter three, negative 0.9, and quarter four, negative 7.2%. So as you can see, the value of my account has definitely gone down over the course of the year, and every quarter it has gotten progressively worse. So now I want to compare that to my actual overall performance in the stock market, because even though I'm seeing this negative 7.2 for the year, it doesn't really tell a full picture because the stock market, like I said, has done so poorly. So over the last year, my overall stock portfolio, including Fundrise, which is honestly just a small fraction of my overall portfolio, has declined 12.3%. Comparing that to the US stock market, which is down 19.52%. Looking at the foreign stock, that's down 15.58%. So comparing my overall portfolio to Fundrise, while my Fundrise is down 7%, my overall performance is down 12%, and the US stock market is down almost 20% for last year. So Fundrise did beat out my overall stock performance, and it did beat out the US stock performance according to my personal capital. So even though Fundrise did better than my stock portfolio, the question still remains, why are they down in performance? And looking at their 2022 year-end letter to investors, one of the things that they said was a cause of the issue was the federal government's response to inflation. So one of the things that the government has done has been to increase interest rates to hopefully bring down the prices of goods, homes, etc. So right now you might be enjoying interest rates rising in high yield savings accounts, which is good. But if you're looking to purchase a house, the interest rates on mortgages has also increased. And what that has done, or is trying to do, is to bring down the prices of homes. So that is causing an overall decline in asset values, including real estate. So this is something that in 2021, they kind of predicted was going to happen in their year-end letter, and clearly it has. The other thing I wanted to make sure I pointed out was a statistic that Fundrise put in their letter. So Fundrise did an analysis of their overall clientele's portfolio. So they have about 385,000 investors. Everyone does not have the same results as I did. What they found is that in terms of dividends, their clients had an overall dividend return rate of 2.17% which is higher than what was seen in the stock market and the bond market, but lower than the public REITs market, an appreciation return of negative 0.67%, which far outweighed the appreciation return of public REITs, public stocks, and bonds. So when they're looking at their overall portfolios of all of their clients or all of their investors, their clients and investors have done much better than people in public REITs, public stocks, and bonds. So do with that information what you will. At the end of the day, 2022 was a rough year for investors. The stock market was just one big roller coaster. Bitcoin, if you were invested in cryptocurrency, just went off the rails. And real estate, unfortunately, was not spared in any of this. It might not have done as poorly as other asset classes, but it still had its rough patches, and it might continue having rough patches for a little bit longer before it gets better. That being said, I don't plan on making any adjustments to my Fundrise account. I think I'm just going to leave everything as it is. If I started to make changes into my investments anytime the stock market or anytime prices went down, I would not have the investment portfolio that I do. So I'm leaving everything I have alone. However, that does not mean you need to do the same. You need to take this information, you need to review your accounts, you need to pay attention to what is happening and make a determination as to what you want to do on your own. Let me know in the comments if you are a Fundrise investor and how you did this year. I hope you found this video helpful, and I'll see you next time. Thanks. Bye-bye.